Hi, my name is Michael Waits, and welcome back to Insurance for the New Possible, a Chubb conversation. We are joined today by Stefan Möller, CEO and founder of Klar, and Alejandra Magaña, Director of Revenue Growth, Digital Transformation, and Distribution Channels at Chubb. Financial exclusion in Mexico remains one of the biggest barriers to balanced economic growth. While millions remain outside the formal financial system, fintechs and insurers are working to close the gap with innovative solutions that address infrastructure challenges and a trust deficit left by traditional institutions. In this episode of Insurance for the New Possible, we will explore some important questions shaping financial inclusion and risk protection in Mexico. Are there structural limitations in the Mexican banking system that keep significant portions of the population excluded? Are deep local roots essential for solving these challenges at scale? What are some of the challenges of building accessible financial products in a country with high rates of financial exclusion? Thank you both so much for coming to the show. How are you both doing today?
Thank you for having me, and it's a pleasure to stay with you, Stefan, right now, and be beginning.
Awesome.
Exactly. Totally excited to be here. Thank you so much for the opportunity.
Awesome. Okay, Stefan, let's start with you. What fundamental problem were you trying to solve when you founded Klar? And what did it need? Why did it need to be solved by Mexicans for Mexicans?
Yeah, so I think, a lot has been said about the problem, and I think it's quite obvious, but I'll just repeat, but I'll try to go a little bit deeper as to why the problem is there. 50% of adults in Mexico don't have a bank account, and 70% of adults in Mexico don't have access to formal credit. This would be a disaster for the 100th largest economy on this planet. For the 11th or 12th largest economy, it's embarrassing, right? So the problem is there. It's backed by data. It hasn't changed. It hasn't evolved. It wasn't trending in the right direction. Now slowly it is. But then if you look at it, how the system is set up, you have 6 big banks. They control 90% of market share. Those 6 big banks, they pay 0% on 0% interest on 90% of their deposits. Okay. If you look at Brazil, for example, that is a comparable economy, they only get to pay 0% on 10% of their deposits, right? So they're making a large margin on those deposits. It's a beautiful business. It generates a lot of cash. And if you're making that kind of money, then you don't really have to step outside of your comfort zone, right? You don't have to give accounts to segments that you don't seem premium or deem premium, and you don't have to lend, right? Because lending is complicated, lending is risky, lending has a lot of complexities that taking deposit doesn't. So, the data is there, but I think I like to throw those data points out there as to why the problem is the way it is. And if the structure of the market does not get changed, meaning that you have new entrants that have different incentives, it's unlikely to get solved.
This is a great introduction. I need to ask you 2 things, though, if you don't mind. One, why are they not paying any interest on 90% of the deposits? That's the first question. And the second question, which is related, is what are overnight rates in Mexico? Because that's just the simple money that they're going to earn by just lending that money to the central bank or to other banks, yeah?
Absolutely, and I appreciate the question because it makes the point even stronger, right? So the reference rate, the overnight rate over the last 2 years, on average, and I hope you're sitting down, Michael. But
yeah,
it has been,
I'm afraid, though.
It's been 12%.
Oh my gosh.
Okay. So these guys make 12% on average. It's been high interest rate years, right? But they make 12%, they pay out 0. And the reason they pay out 0, frankly, is because, since nobody pays anything and the user doesn't, frankly, know that they could be making they should be making 12% on their money, but nobody demands it, right? So that's the real reason.
Okay, I have to follow up if you don't mind. So you said earlier, if I heard it correctly, that 50% of the adult Mexican population doesn't have a bank account, but the other 50% do. And if there's some kind of correlation between having a bank account and financial literacy, the 50% of people that do have a bank account must be financially literate enough to know that in a 12% overnight rate market, that they should be getting 9% on their deposits. What am I missing?
I mean, you're totally right. I think you're missing the beauty of an oligopoly, right? Which, like, the literacy is driven to a large extent by the industry, right? I mean, I think the regulators could have played a bit more of an active role in it, no? And to some extent they've tried. But in the end of the day, the literacy comes from the market participants, right? And so they don't necessarily want to make it that easy for you to access those products. They don't want you to know that those products exist. And in an oligopoly in which nobody breaks the rules and nobody goes outside of their lane, it's people simply don't find out, right? So you tackle precisely one of the big problems and one of the big gaps, and that we're trying to cover as part of our journey of building a business in this industry as well, which is literacy. Everyone should understand that they should be making 9, 11, 10, maybe even 12% on their money, right? So great points. And precisely the reason Klar exists.
Perfect. I want to ask you one more question, and then I want to get to Alejandra. Your personal story seems deeply tied to Klar's mission. What shaped your understanding of what financial inclusion should look like in Mexico? Like, where does this come from? What's the genesis here?
Yeah, it's a great question, and indeed, I think it cascades throughout how we've thought about building this business. I mean, I grew up between Mexico and Germany. My dad is from Germany. My mom is from Mexico. I root for the Mexican team every 4 years in the Soccer World Cup. So I think it's
good for you.
Not bad for me, actually, but
no. We can talk offline why that's a great thing.
But that's an acid way of testing where one feels from, no? But I think it does like mark a little bit of the mission, right? Because in Germany you have, I mean, financial access to financial products is a right. No, it's not a privilege. And then you compare that with Mexico, in which it seems like a privilege, right? It's only reserved for a few. If you don't have enough money, it costs you. And you don't have a lot of money, you don't get access to the good products, et cetera, et cetera. No? So I think that's one big kicker. And then on the other side, I think in Mexico, if you think about it, entrepreneurship is everywhere, right? Sometimes more out of necessity than like wanting to be an entrepreneur. And Germany on the other side is very risk averse, no? Very linear career trajectories, like people optimize for different things. No? So my like life story and my journey, like in many decisions I've made in my life, including Klar, has been, I think, a genesis, as you correctly say, about trying to take the stuff that I've seen works in Germany, but also taking the stuff that I've seen work in Mexico. No, so it's an entrepreneurial venture trying to make access to financial services a right and not necessarily a privilege.
I love this. It's really interesting to see, and I'll get to Alejandra in a second, but it's really interesting to see this mix of the back and forth between Germany, like you said, structurally very institutionalized, and Mexico much more entrepreneurial for whatever reason. But then taking the best from both of those things, saying we want to maybe institutionalize this entrepreneurialism because that works, and then that leads to the financial literacy that we were talking about before, but still keep the entrepreneur spirit where we're saying we need to build something completely different, and otherwise we can't do that unless we're here. So Alejandra, tell me this. Let's bring in insurance for a little bit. From an insurance perspective, how does financial inclusion, which we've been talking about since we started recording, intersect with under-insurance or lack of risk protection in underserved communities in Mexico?
As Stefan mentioned, I think that it's many people lack access to have a formal financial service, no, like a credit card, savings. When you see the part of insurance is more less the penetration that we have in insurance, no? But I think that this result has a higher vulnerability for unexpected events that they have, no? Maybe in some cases they lose their jobs or maybe pass away, and the family have the impact the economic impact that they have, no? And that's the reason that the insurance take a real role play in this situation, no? Is follow the strategy of the financial service, but protect all of the economic of the family in this sense, no? And I think when we are talking about and these kind of partnerships and we work together, we have a better impact, no? Because no matter thinking in the morning that I wanted to buy a insurance, no? Is something that we know and we are working on that, no? But this is the principal objective that we have, no? How can I, under insurance, all the population that mentioned Stefan, no? Most of the 50% of the adult people doesn't have financial service, no? How can we there for them and provide a coverage to be very fast, very clear, and in the correct moment that they need it, no?
Exactly. So can I ask you this too, just to get into a little bit more detail, what role can embedded play? Because, when we talk about financial literacy and financial inclusion, sometimes embedded can just put the product in a place where maybe people don't expect it necessarily. But what role can it play? What role can embedded protection play in helping build this financial resilience that you were just mentioning, right? Because again, if the main breadwinner loses their job or if the main breadwinner passes away, this can be really powerfully painful for the family. What role can embedded play in this place?
Actually, the insurance embedded is, for a point of view, is the way that we are doing our daily transactions. No, is something that you are taking a ride, maybe getting a loan in the bank. No, you need to be there in the correct moment. No, it's not push or sell policies. Is to be in the part that they really need it. And in terms of banks or neobanks, is the moment that they have the correct score for the customer. No, the insurance is the asset that give better risk for the customers because they are thinking about and how can prevent in terms of possible events that impact no matter if the family that I mentioned. I am talking in the early with Stefan, but all the SMEs or all the small business have impacts, and they are the providers of the, not just the family, of the people to work with them, no?
Yeah, absolutely. So Stefan, just back to you. I want to dig a little bit deeper into some of the sort of structural or idiosyncratic challenges of building financial products in Mexico for the traditionally underserved. And I guess the real question there is, like those idiosyncrasies, how do you know what to build if those products hadn't existed before, if that makes sense?
Yeah, I think it's a great question, right? Because I think the obvious path would be to replicate let's make a digital copy of what exists out there in the incumbents offering. No? But I think it has to go. Let's not do that precisely, right? Because then you just probably end up making the problem of financial exclusion slightly worse. Exactly. So for us, I mean, and it's funny, right? Because when we go back to these numbers about exclusion, and I think both the regulator, candidly, and the incumbents have always focused on the why not, right? Like, why are they not in the system? Why are they not in the system? No, and I mean, it's an easy question to answer because the blame probably doesn't lie or rely on you. And we've been focused when we try to build products on the why should they, why yes, like why should they have an account for all those people that don't have an account, right? And so when you go at product design with that mantra guiding a lot of the decisions, then it moves you outside of the box, right? It moves you outside of what you see today. And it's like, hey, let's give them a very tangible reason as to why they should be in the system. And I go back to the interest rates, right? To say like, hey, maybe you shouldn't have your money under the mattress because you're missing out on 10% on overnight, right? Hey, maybe I cannot give you a credit card today, but I can give you a credit builder credit card, right? Where we start off with a deposit and we slowly but surely grow outside of that deposit, right? And we take off the training wheels, no? Why don't we offer you education, right? Like, I mean, we offer an in-app GPT, so to say, right? And the most common question is, hey, will I make it until the end of the month, right? And I mean, that's what a private banker kind of does, right? So it's like, hey, we democratize a private banker, we educate the people on how to manage their money, and we give them a reason as to why they should be in the system, right? So I think you have to completely forget about what has been built, right? Because if not, you just exacerbate the problem. But you go with this clear guideline as to what it is that you want to do, which is democratizing access to service and products that are not available to everyone today. And then you just go and build them, right? So I think that that's the key of how we've approached our product structure.
So you just made me think about something, and I want to follow up with you, if you don't mind. Let's say I'm underserved and I'm working with Klar. I get an account. So now I have some kind of access to like a credit building credit card, right? So you've built very specific products for me, which the big incumbent banks, right, the six oligopolical, if I said that right, companies, they're not building products for me. But let's say the access to credit, because the whole point of democratizing finance is to actually give me the potential and the opportunity to not be underserved anymore and to actually change my wealth projection over my lifetime, right? So the idea would be I get access to credit, I start a business that I could never have started before, but then I get, let's say, wealthier than I might have been. Do they stay in the same program now, right, with these new and innovative products, or do they jump to like the standard institutional banks there and then wonder like why I'm getting 0% overnight rates? Do you know what I mean? Or is there a chance for a business like Klar to say, don't ever leave this environment, because at the point where you actually get wealthy, where the credit has actually changed your life, we're actually not going to build the same products that the incumbents have built. We're going to build better products for people like you. And then the incumbent customers move over to Klar. Does that make sense?
Yeah, totally. And you describe one of the big drivers of our product strategy as well, to say like, hey, I mean, we're building them a credit score precisely along the lines of your argument, right? And then maybe they could get a credit card with one of the big incumbent banks. So it is, and I mean, if they do, it's great, right? We contributed to widening the pie, we contributing to democratizing access, fantastic, right? But we're a business as well, and we look at the P&L, so it's important to not lose those customers, right? So how do you not lose those customers, right? You build into segments that you're not present before, right? I mean, and that's something that the incumbents do relatively well, right? They have a tiered segment approach. They tackle affluent, very affluent. I mean, they only care about those. Right. But for example, what we did over the last year is we launched our first affluent credit card, right? It's a Platino credit card. It comes with bells and whistles. Like the APR is materially lower. So it's like, hey, those users that we have built a relationship with, those users that we want to retain on the platform, right? And their score has improved, their financials have improved, their wealth has improved, precisely as you say. Let's make sure that there is a product to serve those needs within the Klar platform as well, right? So you tackle it precisely well. We believe that a lot of neobanks have gotten a bit lost in this mono product, mono segment fallacy. And the incumbents, I mean, they don't do many things perfectly, but they do some things well. And I think the way they think about segments is something they spend a lot of time and money thinking about. And that's the direction in which we want to build. Now, if they jump off and go back to an incumbent, maybe they come back because they realize they're getting 0%. Or if we force the incumbents to start paying 9%, I mean, that would be an amazing outcome for Mexico as well, right? I mean, probably not the best outcome for the incumbents, but you tackle it very well, right? That's precisely along the lines on which we're building.
I love this. There are so many things to talk about here. Alejandra, I want to talk about this as well. I mentioned in my introduction this issue with trust, right? And how the trust has been broken from some of the existing large institutions. How can innovative fintechs and insurers, in this case, rethink customer engagement where trust in financial institutions has historically been low? And maybe you can explain why it's been low as well.
Yes, insurance can help to reduce the risk for lenders, no? In this sense, no? And I think it's not just for the lenders. It's provide another asset of clients, no? I am thinking about of insurance. I am prepared for unexpected events, no? And in this sense, for example, in the case of credit life, as I mentioned, in the protection of unemployment, is something that it's happened, no? And it's happened and maybe impact the credit of the lender doing, no? And in this sense, the product can help to protect the payment of the loans, no? And in this sense, is something that the insurance doesn't mention, no, in a lot of time, but it's something that it could be helped for have to reduce the risk that they have it, no? Have to reduce the impact that they could have it. And in terms of innovation that you mentioned, I think that speed is the principal value of the new products. But I think that we need to trust in terms of what is the correct product, no? What is the product that is very specific for the moment of the client, no? As I told you, no? I know that it's very common to listen, no? The correct product for the correct clients and the correct channel, no? But to obtain that, for have this measure and the correct product for each is complicated in Mexico with all the regulation that we have, no? We try to innovate in different segments, not just in the financial service, in retail, in airlines, and it's very common for us to the regulator is behind us, no? We are trying to innovate, we are trying to be in the follow the life cycle of our clients, no? Because as I told you, is push to sell something, is to provide solving a financial service to be there in the correct moment that they really request for us, no? As I mentioned, is for us is better to be there and you don't use the insurance, but if you use it, we are there, no, for you to minimize the impact that you could have.
I like it. That's great. So, Stefan, again, back to you. We talked a little bit at the beginning of our conversation about why it's so important to have this deep local knowledge. Maybe you can kind of expand on that, right? How is this manifested in both the way you build products, the way you build tech, and your team structure in general, right? Why does it need to be deep local knowledge? Like, why can't foreigners just come in and just do this on their own, particularly existing fintechs that have been successful in other places?
Yeah, and I mean, just to set the context, I mean, those oligopolistic players, I don't know if I said it right either, but at some point, one of us.
I think you got it better than I did, actually.
But so it is funny, right? I mean, it's a bit sad more than funny, but out of those 6 big guys that control most of the market share, one is Mexican, right? So out of the big incumbent wave from the past 50 years, not like only one big Mexican institution is left. And yeah, I mean, market dynamics, let's call it, right? And then if you look at the fintech wave, right, it's like, hey, okay, like now there's a lot of capital available. It's been proven elsewhere. Let's build. If you look at it, I mean, Klar, out of the big folks, now that the sector has concentrated a little bit, we're the only Mexicans left, right? So, I mean, there's some aspect of a personal mission here as well to say like, hey, like if the first wave went to the multinationals, let's make sure that the second doesn't exclusively go to multinationals either, no? So there's the driver and it's important to set the context. Now, as to why and what can we do different and how we can take advantage of that fact. I mean, I think it's a matter of 2 or maybe 3 things, right? One is technology, right? I think, I mean, as Alejandra says, right, like you need to have a very tailored product. You need to have a product that complies with regulation. You have to have a product that serves and accommodates idiosyncrasies that exist here, right? So I think having a technological platform, even though the good global fintechs have somewhat modular platforms, it will never be as good as somebody that is building exclusively from this market for this market, right? So I think that that's one piece, right? I think the product can get tailored in such a way that it accommodates the existing or what drives demand better. The other one, maybe it's team structure to your point as well, Michael, and ownership, right? I mean, in the end of the day, all of these multinationals, whether incumbents, whether fintechs, I mean, the decisions rightly get made somewhere else, no? I think there's a lot of input from the local teams, no? There are good leadership teams down here on the ground, but in the end of the day, they have to run every single decision by someone else, right? And I think that should allow us to be faster, right? And I think that has cascaded in a broader product offering, in like we've been able to outpace a lot of these peers in, I would say, decision making and execution, and to some degree because the decisions get made here.
So one of the things you talked about was bringing this, this sort of German institutionalization, right? This back and forth you have between, and look, let's just say this explicitly. You're a third culture kid. I mean, you're not a kid anymore, but you're essentially a third culture kid. And the only reason why I say this with confidence is I feel like I'm a third culture adult. So let me share this with you why. I was born and raised in the United States, but I left the US when I was 24 years old. And I've lived in Asia since then. So my entire adult business life has been in Asia. I'm not Asian, but boy, I feel I know a lot more about Asian business than I do about American business for sure. And my whole life has been growing up here as an adult. So I understand that back and forth and the push and pull. But the real reason why I bring this up is when you hire, are you also trying to hire so you get multiple sort of diverse opinions and diverse perspectives to bring in not just the German perspective on it, but the Irish perspective or some other perspectives they can say, we can see what's happening here, but we know what happens in another place. Like you bring a Japanese gal in so you can get some impression about what's happening there. And you build teams like that, whether they're tech teams or customer service teams. Is that something you think about as well?
Yeah, I mean, absolutely yes, and I think that that's also one of the things that differentiate us, and one of the things we do very thoughtfully and proactively, right? I think being Mexican doesn't mean you only hire Mexican. Being Mexican doesn't mean you only hire in Mexico. I think for us, what's important precisely is to get those diverse opinions on the table. Have opinions from folks that have worked in markets where they've seen the democratization of financial services, right? Asia being an extraordinary example, right? Folks that come from the US, in which a lot of the world leading technology companies have been built, right? So I think that has been key, and that's one of the big trademarks about Klar as well. I think today we're around 250 employees and we have over 55 nationalities, right? I mean, it's mind-boggling, right? But that's a pretty nice, diverse ratio, right? And we get to make the decisions of who has to be in Mexico. Like the product folks need to be in Mexico so that they understand the feedback and the loops are quick and that they can react. Maybe some of the engineers can be elsewhere, particularly those folks that have built architectures that have the scale that we require at the stage of this business, right? So it's a privilege to build a company with that much flexibility and with that diverse focus in mind, because precisely as you say, there's immense value in bringing different opinions to the table.
So you just reminded me of something else too. One of the things that I've learned about Klar is that a lot of and maybe I should start by backing up a little bit. When I was at Goldman Sachs, we spent a lot of time building technology internally. But every now and then we'd say, we need to go external and buy a third-party piece of technology. One, because they were building it for 7 other people. So again, it was less expensive. But also because they'd had all the experience of building it already, so they knew how to do it. You've done a lot of this stuff apparently in-house. Why is that level of sort of product control so important to you that you want to build all of this stuff in-house?
Yeah, it's a great question. And indeed, it's been one of the bigger pains, but one of the best decisions I think we've made, right? To say like, hey, as much as we can do in-house, let's do it. And maybe it ties back a little bit to this question about understanding the nuances of the market, right? And I think that's why some big internationals have come here and have failed, because if you think about it from a very business P&L perspective, I mean, this is a low volume, the other way around, high volume, low margin business, right? Which might be different in the US, right? Maybe in the US, the average card transaction is $20. The average transaction for some of our segments in Mexico is $1, right? So the margin profile of when that card swipes is completely different, whether it's $1 or $20, right? So if you own more and more of the stack yourself, the unit economics look better, frankly. No, that is almost a universal truth if you can build it. And then you can give back to the users, right? I mean, the reason we can give those rates is because our cost to serve, our operating cost structure is completely different than one of those big banks, right? And so maybe we don't make 12% on the deposits, right? I don't think we should be making 12% on the deposits. But maybe we make 200 bips, as you said, and we make up for it at a cost to serve or an operating cost structure that is completely and materially different than that of the big banks. No, so that's one driver. The modularity of the product, as I said before, right? I mean, the more you own, the less limitations you have. You go out there, you get feedback, you look at data, you say like, hey, you know what would be amazing is if we tweak this thing in this way or another, right? And we can ship that in 4 weeks instead of having to go to our partner and see if they can do it, right? So I think the modularity of the product is also key. And as we're seeing today, and I mean, I'm sure we'll talk about artificial intelligence at some point. I don't want to get ahead of myself, but it's like, hey, like if you own the stack, you own the data, and the data flows freely within your systems, and hence you're much better able to leverage it for AI, right? So that's a bit more of a lucky strike there, but it proves that owning the tech stack and being completely integrated in the end tends to pay off if you can pull it off.
I like it. Yeah, I mean, I could spend hours talking to you about this, and I love a guy that talks about money in terms of bips. It's been a while. I love it. It brings back good memories. Alejandra, I want to ask you this. We've been talking a lot about innovation, right? And speed of iteration as well, and new products and stuff. How do you ensure that speed and innovation and product development, that they don't compromise ethical and regulatory considerations that come with insurance protection?
As I mentioned, the speed is important, no? But it's more important that trust, no? Take the correct, build fast, as mentioned Stefan, but we need to test responsibility, no? As I told you, we have a regulation standards, legal terms that we need to be clear that we are taking in our communication. And actually, our in early process, we use user feedback, no? And that's the reason that we are very close to the really needs, really matter for them in terms of protections, no? And in this sense, and I think innovation, as I mentioned, is more about not just tech, no? It's more about customer experience, no? We need to improve the experience that they have. They need to trust of us, no? We need to be there in the correct moments, and actually, if we are thinking, we need to be more clear, no? The long policy documents that we send every sell an insurance, we need to be more specific. What is the coverage? What is your claims? Is something that you need to have to explain how can work the claim in 60 seconds, no? And it's something that the customer appreciate more than you are talking about different coverage, no? Is if you need it, we are there, and you need to do that, no? And I think that the innovation, it could be happen more related for the strategy that our partnership has, no? As mentioned, Stefan, we are be there when the people is needed, no? And the coverage, we can have many coverage of protection, as I mentioned, no? In terms of maybe people is credit life, in terms of SMEs, business interruption, no? We are there in the moment that they request, no? And I think that this is innovation, no? We need to be faster. We need to be there that when are really needed, and very, very clear that we don't have the correct that we have the correct information for the customers, no? Be clear of the legal standard that we request to pass for the regulator.
Understood. I want to follow up on something with you that Stefan said. So we talked a lot with Stefan about how Klar emphasizes this in-house development, right? But how do you think insurers should approach these kinds of tech partnerships, especially in these fast-moving environments, right? Because one of the things that Stefan emphasized was that it allows them to move internally a lot faster. How do you think about how insurers should approach this, particularly in this kind of fast-moving environment with fast-moving fintechs?
Actually, we are working right now to implement 4 products right now. I think that we start early of June, if I remember well, and we launched the first product in October, no, and we pass all the regulator that we need to complete, no, in terms of technology, be an umbrella of protection of the data, no, because the data is so important for them and for us. And in this sense, when we are talking about to work together with a fintech in terms of Chubb, we are there because we have the technology, we have the knowledge of them, and that's the difference to be there in a roadmap for 1 year, one roadmap for MVPs that you have in 3 months, no? And I think it's something that we are working very well with in Chubb and work with different kind of partners as a fintech.
How important is it to have a shared vision with these fintechs with whom you're working?
I think that is the most important thing, no? And I remember the first conversation with Stefan in a cafeteria here in Mexico, I think 1 year ago or more. And we are talking about how can we see the different point of view of protection, no? In my point of view, the insurance, in his point of view, the financial service, no? And how can we complement these visions, no? How can we be there in the correct moment, and the correct moment be in 3 months ago, no? And I think that is something that we are having more common in terms of work together and work with like a bank insurance that you know, in order to have the correct partnership and the correct point of view in terms of investment, in terms of technology, in terms of innovation of products, as I mentioned. And I think that is something that they are working in this sense in Chubb and with the different partnerships.
Got it. Stefan, let me come back to you. Klar is preparing to launch a B2B service as well, right? Following a pretty successful pilot, apparently. What's the problem you're trying to solve for Mexican SMEs? And I'd be curious to know if there is an intersection or some kind of correlation between the people that are running the SMEs and the people who are just personally underserved as well, if that makes sense. And and this follow-up to that immediately is like, why is this the right time to start this new product line?
So indeed, right? We acquired a B2B fintech about in Q4 of last year, right? So this one we said like, hey, let's buy and then build on top of it, right? Like there's a lot of knowledge that has been built there. I mean, the reason, like the problem we're trying to solve is exactly the same that we have on the consumer side, right? Like
it feels like it.
Exactly. It's, I mean, exclusion due to complacency, right, of the incumbents sector, right? I think if you look at the indicators of credit penetration over GDP or credit penetration amongst SMEs, right? If you don't want to go as refined, it looks disastrous as well. No, we're probably like in the bottom quarter of all like semi-developed economies, right? So big opportunity there as well. Why the problem? The same story, right? Like the banks make a lot of money. Like why fix what in their view is not broken, right? So great opportunity for us to step in there as well, right? And try to serve the SMEs with a better user experience and with a very obvious answer and very tangible answer as to why yes, right? Like, hey, bring your money, bring your treasury to Klar B2B, right? We will pay you money when the big incumbents are they don't pay interest on those deposits either, right? So that's an obvious one. Let me build a much more tailored credit product for you folks, right? Like let's embed this with our technology platform so that you can do factoring for certain invoices, that you can get paid ahead of certain invoices you have filed. So, I mean, it's a beautiful product suite, very technology enabled, right? And something that we believe, and from what we're seeing in our successful pilot, is going to be well received. As to why do it now, I think there's two factors. No, one is Klar external, one is Klar internal. I think Klar external, I mean, we all know what's happening geopolitically, right? I think Mexico is a bit of a bifurcation, right? We either jump on this opportunity and it's the best thing that happened to this country in probably ever, right? And we start to build out the middle class we start to become even more relevant in the global supply chains. No, I'm talking about the relocation of the supply chains, right? And so from a macro perspective, Mexico is in a golden moment, right? And I think the government knows it. The government is at least trying to take advantage of this opportunity. There seems to be a plan. And I think that it's also our responsibility as a Mexican company to participate in what is very, very heroically called Plan Mexico. No, so I think that's one driver. No, Klar external, we need to be there, and the conditions are there. And Klar internal, I mean, it's beautiful because for the last 5 years we've been building what we've been trying to get to where we are today on the consumer side, right? Which is a business that works, a business with scale, a business that can integrate new products relatively easily. And we should always keep our eye on what is next, right? It's like, hey, can we leverage our technological platform in order to serve SMEs? Absolutely, yes. Is there a flywheel to our consumer business, to your last sub-question? Absolutely, yes, right? And one, you precisely touch on it. We have a lot of folks on the consumer side that are micro entrepreneurs, right? I mean, they use our credit card to run their small business selling stuff online or selling stuff offline, right? So those are a beautiful, very easy to target cohort, right? Because we say hey, it looks like you're running a business on this credit line. Why don't you want, would you like a formal credit line? And then the other one is trying to milk that flywheel that, I mean, I don't only say bad things about incumbents. I think the incumbents have done a good job of building that flywheel between corporations, SMEs, and consumers, right? Where if you have the SME as a customer, you try to get the payroll. That gives you a lot more data about their employees that in the end of the day are consumer segments, right? And I think that that's very powerful because you use that data to underwrite them better, to underwrite them cheaper, to collect before everyone else or anyone else does, right? So it's a flywheel that I don't think we need to reinvent. I think it's a flywheel that we just need to bring into the digital age, and I think Klar is phenomenally well positioned to do so.
So I don't want to make a complete equivalency between Thailand or some other countries in Southeast Asia and Mexico, but I do want to generalize a little bit, and it's always dangerous to do this from my own experience. I didn't know, right? So you hear this term small and medium-sized business. So you think that it must be a small or a medium-sized opportunity because that's kind of the way people talk about it. They shrug it off as because it's not an MNC or it's not an established gigantic company that the opportunity to work with them is small. And yet if you dig deeply into the statistics, whether it's in Thailand, in the Philippines, or in Mexico, and I believe even in Germany, even in developed countries, SMEs basically run 90% of the economy and account for probably 70% of employment. And if that's true and it's underserved, well, then that's also a massive opportunity. I just wanted to point that out to people because I believe that's also true in Mexico, yes?
100%. I couldn't have said it better.
Okay. Alejandra, one more thing for you as well. So SMEs, and we've been talking about them for a little bit already, right, often face a dual burden, limited credit access, we were just talking about this, but also limited protection. How can insurance be integrated into these financial products for SMEs to support their long-term growth in the same way that credit products can be?
Actually, in this sense, I mentioned a little bit in the conversation, but we can bundle insurance directly into the SMEs products, like loans, like leasing, like payment solutions, and in this sense, and as I told you, is like an asset that they have to reduce the risk that they have it, no? And in terms of the lenders, they see that like a good point of view of the customers because they are private events, no? They have the opportunity to say, okay, I have the business interruption, no? What happened with the loans, no? And in this sense, our products, as I mentioned, is part of the real life of our customers, no? And for them, maybe in some cases, prevent or have more resilience after crisis, no? Because, pandemia, no? Pandemia have the opportunity to take the notes that they are prepared or not, no? Many SMEs have the opportunity to survive and another no, no? And what's that the reason of that? Maybe they don't prevent the risk that they have it, pay providers, pay the payroll that they have for the employees, and depend of them many people, and in this case our coverage can help them to give them less the risk that they have it, no? And I think that in essence, in Mexico, it's very common that you has an entrepreneur, no? Maybe you start with a little e-commerce, no? Selling different things, and in the beginning is just you and your computer, but less you have a big e-commerce as I hope so that the level of Mercado Libre, no? And something like that. But I think that the in the terms of SME, we can follow their strategy and we can be there in a enable to grow, no? In these cases.
It sounds to me, just by talking to you both for the last like 45 minutes, but there is this massive intersection and correlation between what the gaps are in both the banking world and the insurance world. And it almost feels like they're mirroring each other, right? We need to make these products for these people in the banking system and in the traditional financial system, but then to be able to protect them, we need to also have some innovative products to be able to protect them. And those products also need to be new and innovative because the stuff that we're protecting is new and innovative. It's just interesting for me to see the back and forth. Stefan, let's end with you. We've been at this for probably longer than both of you can imagine, but just finally, just give me like the long-term vision for Klar's role in reshaping the financial landscape in Mexico and possibly beyond that, right? Because there are all plenty of other big opportunities. And what does success look like for you guys 10 years from now?
Yeah, it's a great question to finish off. And I think for us, and I hope it cascaded a little bit through the dialogue. I think it's much characterized by what we discussed of going from single product to multi-product, from single segment to multi-segment. And not just because of the sake of the more product, the better, but precisely you alluded to a lot of these to accompany the users throughout their financial life as their lives get better, right? I think it's like, hey, if we were able to contribute, that's phenomenal. I want to stay by your side as your finances improve, and hence I need to have a product that serves those needs. And then on the multi-product or multi-segment, taking advantage of those flywheels, right? Not just because of the sake of more segments better, but hey, how can I get more data? How can I have a better view about the risk and about your assets and about so that I can give you much more tailored of an experience and much better pricing and much better of a condition, right? So I think like what we've been building for the last 5 years puts us in a place where we need to keep compounding that business, but we cannot get complacent and we need to grow it from single product, single segment to multi-product and multi-segment. That's one. And then the other one that I think we stumbled a little bit upon, because I'd be lying if I told you 5 years ago I knew where we would be, is what AI does as an inflection point, right? I think things that we thought could be built maybe in 20 years from now or 15 years from now, like I think they can be built today, right? And I think it is our obligation, and like being one of the front runners, because we're a technology company that happens to do financial services, how do we reshape the user experience? How do we reshape the tailoring of those experiences? How do we reshape the products? No, biting a little bit into my previous point. So I think like we've all built, like some of our peers and ourselves have built what was expected for 2025, but it turns out that maybe we can build what would have been expected for 2035, right? And I think that's what gets me the most excited about what's next to come.
I'll give you one more thing and then I'll let you both go. When I was working at a big bank in Japan, I once asked one of the guys who was on the tech team, a senior guy in the tech team, I was like, why don't you just go start your own company? You're so good at building technology. You understand how big systems, very sophisticated systems get built. These are very complex systems. Not everybody can do this. And I feel like your engineering team would probably give the same answer. And I want to use the word problem in a positive way. He said to me, big banks have big problems, right? Which means big issues, big things that they need to solve. And he said, and I love solving big problems. And it sounds to me Like your engineering team must be pretty pumped because now they're thinking, like you said, it seemed like we were going to be able to build this stuff 30 years from now, which meant that I wasn't going to be able to participate. But now these new tools are getting built. And if we can use those tools in a way that's really innovative, I can do that. Not meaning Michael, but your engineering team. And they must be super stoked about this. So that's kind of cool. Anyway, thank you both for doing this today. I really appreciate it. You were both amazing. Stefan Möller, CEO and founder of Klar, and Alejandra Magaña, Director of Revenue Growth, Digital Transformation, and Distribution Channels at Chubb. You were both awesome. Thank you so much for doing this. I really appreciate it.
Thank you, Stefan.
Thank you so much, Michael.
Thank you, Michael.
Thank you, Ali. It was a pleasure.